Welcome to TheoTrade. This is Don Kaufman. This Memorial Day weekend, please check out our Smart Swing Trader Power Bundle. The video on this page here, I take you through everything that is involved. Again, absolutely packed, filled with education. TheoTrade.com/S as in Sam, T as in Tom, P as in Peter, B as in boy. Again, TheoTrade.com/STPB. This weekend only. It's a smart swing trader power bundle. Guys will be shocked at the number of courses in this particular package. Now, let's get to the weekend update. To the charts and trades we go. Look, at this point, good market data could be atrocious for the marketplace as a whole. I'm going to explain that and much more here, of course, on this TheoTrade weekend update. Let's start to break down the marketplace as a whole in one of the most likely of areas to begin with, the SPX, better known as the mother of all products. Look, if you missed Monday and Tuesday of this week, well, I wouldn't say you were missing much of anything. The marketplace totally stagnated. There was just like no volume. It was horrendous. Then on Wednesday, right here is Wednesday, we actually got the FOMC minutes and things started to get interesting. I'll talk more about those Fed minutes in just a moment. Thursday, I mean, it was NVIDIA and, it just became Mr. Toad's wild ride. It was like NVIDIA versus the entire world. And on this Friday, we've got a bid back under us on this Friday. And check this out. This is a great way to end into a holiday week. Right now, this line that I'm drawing on the screen feverishly, you know what that line is? That's actually where the week started. So through all of that, we are massively unchanged on the week. With that being said, though, even though the S&P is massively unchanged in the week, there is a huge and critical divergence underway. Take a look at auto expected moves, specific right now to the QQQ. All right, so here's the NASDAQ 100. The NASDAQ 100, we are, in fact, at the upper edge of the expected move, right? So upper edge of the expected move in the NASDAQ. Let's flip that around to the SPX. The SPX, once again, is completely unchanged. In fact, if we were to close right now, we'd be down, but by a couple of points, right? Then you look at something like the IWM, the Russell. Check this one out, auto expected moves. Do you realize the Russell is actually at the lower edge of the expected move? And, last but not least, and I never pull this up, take a look at the Dow. Okay, were you aware? Dow got its clock cleaned throughout the course of the week. It's a big divergence underway, and it's something that we're going to have to pay a lot more attention to in the days to come. And I'm going to tell you right now, this is why you really got to start paying attention. Every chunk of data that comes out, if it's good, the markets are reacting negatively. And it's exactly what really sparked sell-side activity specifically on Thursday. But let me break it down a little bit deeper. To begin with here on this weekend's update, again, when I talk about the divergence, so what do you have? You have the NASDAQ higher, right? If you were like kind of draw this out, forget about what's on the chart. If you had the NASDAQ was straight up, the S&P's kind of skirted through the middle, okay, and the Dow and the Russell straight down. I mean, complete split and divergent out there. And the reason I say that's dangerous, okay, is because what is even holding the S&Ps together at this particular point in time? Well, it's the usual suspects. Like, need I actually mention again? All right, you take a look at something like Microsoft and you bring up its auto expected moves. Look at this, Microsoft's outside the upper edge of the expected move. Okay, Apple, not that great of a week, massively unchanged. So Apple is, part of the divergence. Taking a look, you realize Amazon, rough week, actually lower edge of the expected move. And again, the reason I'm bringing this to your attention is at the end of this week, even though the S&Ps are completely and totally unchanged, what people are not seeing, okay, is how much market cap is actually leaning to the downside right now. Then Google actually down slightly on the week. Of course, Meta, all right? Meta is rebounding right now. However, only mildly higher on the week. Obviously, Tesla doesn't have much of an influence anymore, up mildly on the week. And of course, the trade of the week, NVIDIA. NVIDIA actually held the entire marketplace together throughout the course of the week. And again, when you start looking around, with different sectors, then we bring up like the financials and you bring up auto expected moves in the financials. And again, this stuff is instrumental to understand. Financials smash through the lower edge of the expected move. And I really want to highlight this because this has been the impenetrable force to the marketplace. And again, I'm going to zoom out for just a second so you guys can see that impenetrable force to the marketplace really got hammered over here. And as I said, you want to pay careful attention to it because in the end, even through some of the usual suspects, what do you really have? Got a little bit of Microsoft, okay? And even Meta, again, mildly up. It's all NVIDIA. And that's why I'm actually going to talk about here in just a moment, like NVIDIA versus the marketplace. But I wanted to give you that perspective right off the bat that what you're seeing right now is, this tent that is just getting sectors knocked out from under it. I didn't even mention the energy sector, which also, it got hammered throughout the course of the week. When you looked at this week, if you were just to look at sectors, you're like, okay, so the energy sector is down, the financials are down, and you start looking at some of the big market caps over here, and they're lackluster. Okay, if not for NVIDIA, you'd actually have a pretty horrendous week inside of the NASDAQ. All right, push that aside for just a second. Okay, what's starting to spark a degree of volatility to the marketplace is clearly the Fed minutes. Now, I'm not going to sit here and preach to you about the Fed minutes. I talked about it a little bit on Wednesday after the close. The Fed came out, right? And to say that they were hawkish, I think is an understatement. For those of you that don't understand, like hawkish, basically they're like, lower rates? Are you kidding? We're still considering raising rates. And the marketplace has changed. The Fed fund futures have now shifted, and they're showing approximately one cut into the end of the year. But there's actually, big time players in the marketplace, including, Goldman Sachs actually came out and said they expect no cuts to the end of the year. So the marketplace at this point, it's going to react, okay, pretty, chaotically and possibly atrocious marketplace if good data were to come out, because good data just implies that's it. You're not going to get a rate cut. And one of the things that continues to, really, let's say bother me, but this is just an area of contention for me. And I will reiterate this, okay, time and again. Look, inflation, right? We can talk about that till we're blue in the face and, higher rates don't matter anymore. But the bottom line is, okay, higher interest rates, they may not matter to necessarily like a Microsoft or an Apple or an Amazon. They're going to matter to you and us, you and I. Again, they are going to matter. And the higher rates are eventually going to start to undermine the consumer. And as I said, last weekend, I was looking at stocks like, Costco and so forth. Its earnings coming up very soon. You saw Target. Okay, Target came out this week and got cracked lower. And again, I was talking about this on Wednesday, it just didn't impede upon the Walmart. It didn't impede upon Costco. And I was just talking about like Microsoft. Higher rates don't, impede upon a Microsoft, but they do because they'll undermine each and every one of us. Now, okay, that would be, of course, kind of down the line to some degree. The aspect, though, that really resonates with me, it's not. Okay, I'm not here to preach to you about, higher rates are going to hurt this. Look, higher rates, okay, but it's the asset prices themselves. When you see the S&Ps literally at all-time highs, that's the part that's bothersome. I don't think that you get disinflation, which is, again, inflation cooling off to some degree. I just don't think you get disinflation with that asset prices, okay, up where they presently are. And no matter what asset prices you want to look at, for the most part, things are at or very close to all-time highs. And that in unto itself is not going to be a good factor, again, in trying to get inflation under control. I think we have to see asset prices to come down. When people actually feel like they don't have enough capital out there, well, how do they get there? Well, I'll tell you what, S&P selling off 20 or 30% will get you there pretty quick. Not likely to go out and spend, and all of a sudden we get some disinflation, if you will. But that is what I continue to derive from Fed minutes, is disinflation has a lot to do with asset prices. I know that's not part of the Fed, dual mandate. All right, pushing that aside. Let's actually get to NVIDIA. So NVIDIA, it's the talk of the trading community. Okay, and it shouldn't be. I mean, look, it just comes down to market capitalization. And when I say it's stock trading community and shouldn't be, it's a $2.6 trillion company. Okay, and it's really closing the gap. It's only 300 billion now away from Apple. Okay, it's a stone's throw off Microsoft as well. Microsoft is about a $3.2 trillion company. Again, so Nvidia continues to close the gap. But as I continue to reiterate, and the most important thing to understand about Nvidia is that Nvidia, okay, is a completely different beast than Apple or Microsoft. And in my mind, it's twice as important, because if you look at its volatility, even after the earnings announcement, it's still, 30 days out. And again, I want to highlight this because I think it's so critically important. 30 days out, you're still sitting at almost a 40 vol, almost a 40 vol. And you go, who cares? Well, I care. I'll tell you exactly why I care too. You go to something like Microsoft or Apple, they've now dropped to like a 17 vol. So, a product like Nvidia is, if not, double, it's almost 2.5 times more volatility. So now it's a $2.6 trillion market cap that's got volatility, okay, that exceeds anything in its weight class, anything in its weight class. And that's why, it's not acting like a $2.6 trillion company versus an Apple. If you volatility weighted it, it's double or even beyond that. And it became the pivotal stock because if you saw what transpired, okay, on Thursday, and again, I'll go back to Thursday inside of the S&Ps, and we'll bring up a 30-day 1 hour. All right, that's one of the single largest moves that we've seen, okay, in anything, all right, over the last 30 days. Absolute violence inside of the marketplace transpired in this is 30-day 1 hour. So you got to realize that's 1, 2, 3, okay, and really what transpired in a 3-hour period was some fairly tumultuous sell side activity, which again we're coming to here momentarily. So this, okay, was what I termed Nvidia versus the world, or Nvidia versus the S&P 500. What a lot of people missed is Nvidia was up over $100, basically a 10% move to the upside in Nvidia. Okay, obviously in yesterday's trade, huge burst to the upside. Look, it's on earnings. Nothing to see here. It did fall a little bit later in the trading session, pulled back to the expected move, but still, very close to a 10% move. Meanwhile, at the exact same time, if you had looked at the advanced decline line on Thursday, it was dire out there. Okay, in the S&P 100, you have over 90 products. We went for full-blown correlation to the downside. Like it was literally 90 products, okay, to 10 products trading higher. Nvidia, ironically, kind of saved the day. I mean, the S&Ps could have they ended up down about 50 handles on Thursday. They would have been down 100, 150 had it not been for Nvidia and a 10% move to the upside. That's how significant it was. Okay. And what was the actual trigger for it? Right? Everybody was like, it's PMI. PMI definitely was one of the triggers, but the real trigger, okay, was actually the Fed minutes. It's all interrelated. The Fed minutes scared the marketplace to a larger degree, okay, that interest rates are not going to be lowered. The PMI just rocked the marketplace because it confirmed that the Fed should not even consider lowering rates at this point. Okay, now here's the real key to it as we're coming close to the close here on, again, this Friday afternoon. The real key to this is not so much about PMI. It's not so much about the Fed. Here's the one thing that I really want you to pay attention to, and that's this. You realize that coming into this holiday weekend, the VIX now has actually regressed back down to basically the 12 handle, okay? But yesterday, of course, being none other than Thursday, when that PMI kind of rocked the marketplace, I'm going to zoom in on this, okay? From relative high to the low over here. So the marketplace was up 50 handles and then the marketplace was down 50 handles. You had a 100 handle move. That's a 100-point swing in basically a 12 VIX, okay? People, that is not a good or healthy thing for this marketplace. Yes, we saw VIX come up a little bit yesterday. And again, I think that this is of critical importance because not enough people are actually handicapping the fact that, yeah, VIX took off a little bit to the upside over here, but you got a 100-handle move with volatility basically shrugging its shoulders. It is a very, very dangerous perspective because volatility completely abated once again, down to a 12 vol. That and that alone was enough to get me to actually buy a VIX spread, which I'm going to show you here in just a moment because I want to recap some of the trades I did throughout the course of this week. Again, I saw the volatility, in the marketplace, and yet I didn't see the price action in the VIX rocket up. It's just like, fear almost just gets brushed off. There's so much complacency in here. And that's why I say, like, really good market data, things could turn atrocious instantly. And it's because of the lack, okay, of vol movement. I'll explain again here in just a moment. Now, to recap some of the trades I did throughout the course of this week and kind of what to expect a little bit next week. First of all, I closed an XLU trade. Again, I closed an XLU trade. We had an in-out spread on XLU. For those of you that are in this trade, we are out of the contest. Some sell-side activity rocked the marketplace, obviously Thursday, got me out of the XLU trade profitably. Starbucks, this was actually a catapult in terms of Starbucks. We had a bullish trade on. I closed out of the Starbucks trade earlier in the week, okay, on a big bullish candle to the upside, of course, on Wednesday. Got out of it, before Fed meeting, got out of it before, I should say, Fed minutes, got out of it before I had to deal with NVIDIA. Nevertheless, okay, that was a profitable trade to the upside. I also, in the sell side activity on Thursday, was able to close, okay, a short call in the S&P options on futures. And the last thing I wanted to mention is one of the new trades I actually opened up is just a bullish trade in VIX. Okay, skew in VIX right now is absolutely spectacular. And I'm going to just spend a moment and detail this trade. When I say skew is spectacular, I'm talking about the implied volatility here. Check this out. I just went out and outright bought, okay, a call spread in VIX just for the next 24 days. Okay, I bought, in this case, the 14 calls, bought the 14 calls and turned around and sold, okay, the 20s. The trade is going for, I would say, next to nothing, but you got to look at this. I bought basically a 74 vol and sold 120 vol. Talk about a wicked skew. You want a nice shot, thinking that volatility doesn't necessarily have to come, but I was able to get this trade on for about 50 cents, trading for 56 cents right now. But I'm telling you, okay, it's a shot in the dark over here where if volatility does spike, you're going to hit the cover off the ball. Again, it's a $6 wide spread for about a 50-cent debit. So why am I into it, and why do I actually like that trade? Before I get into the SPX and talk a little bit about, this next holiday kind of week of trade, I'm going to tell you exactly why. I don't care if it's holiday trade or not. Okay, I saw pretty good degree of volatility hit this tape, okay, in yesterday's trade. Here it is. We traded all the way at 53.68 and then traded all the way down to 52.73. As I said, it's a 100 handle move. And at the exact same time, volatility didn't take off. And yet, I'm telling you right now, I want to be in a long volatility position right now. It is, okay, only at this point, it's put yourself on the clock for volatility. Up there's the closing bell. Put yourself on the clock for the fact that volatility, okay, could explode very soon. I don't know if it's going to happen in the time frame, allotted, the next 24 days, but I am going to say this, okay? I would put yourself on the clock for that one, because when you start looking at short-term volatility, specifically inside of the SPX, okay, I mean, it is absolute, unequivocally, it is rock bottom out there. And to see a 100 handle move, okay, and the volatility not budge, it is clearly and decisively a warning sign. Moreover, for those of you that don't necessarily look at volatility futures and volatility futures, look, this stuff gets a little bit more wild when we start looking at things like vol futures, okay? But there is once again a really substantial kind of contango in here. I mean, again, these vol futures all the way down to 1342, the 54-day vol futures, July vol futures, okay, to 1430. There's a lot of signs on the screen over here that the marketplace, okay, the volatility is just so incredibly compressed at some point. Like, it literally is not going to go lower. It can't go lower. It could springboard and explode higher. And what can actually transpire? You get another day of sell side activity over there, and all of these 0 DT options, okay, trying to get out of positions can cause, okay, volatility literally to erupt. I love the fact that there's such heavy skew, okay, in VIX. As I was pointing out a moment ago, that heavy skew in the VIX is indicative of, well, there's a lot of hedging activity still transpiring inside of that volatility product. So again, long volatility, whether you want to take this as a trade or whether you want to use this as a hedge, you can use this as an outright trade in VIX, or you could use it as a hedge. It really should be a consideration at this point in your portfolio. All right, last but definitely not least, as we do each and every weekend update here at TheoTrade to the SPX. As I said a moment ago, the SPX, I mean, okay, to almost the penny, finished massively unchanged. So we just came off of a week. We had a $56 expected move. Again, a $56 expected move. And we did not hit the upper or lower edge of the expected move. Now, we're coming into what will be a 4-day trading week. Obviously, markets are closed for the holiday weekend here on Monday. When we do reopen, okay, as I said, it's just rock bottom vol. Like Monday, it's a 4.79 vol and $21 move. Just chaotically low. All of next week, okay, all of next week is expecting right now about, and again, I just want to detail this, about a $47 move. Again, all of next week is about a $47 move. Now, people, that one's not set in stone yet. It could change very, very mildly. It's not set in stone. The reason I'm bringing this to your attention, okay, look, you just came off of a week where you had, about a 50 some odd dollar expected move. Now you're going to come into a 4-day trading week. That's only ultimately going to be about a $47 expected move. And yet we had one trading day where we had a 100 handle move from high to low. Okay. This is exactly why I'm looking at long volatility positions right now. Thanks everybody for joining us here at TheoTrade. Have a wonderful holiday weekend. Bye-bye.